I don't want your policy to lapse.
Yeah.
I don't want to have to answer for you may be taking out too much money. You bought a car, never paid it back, and the policy's blowing up. I don't want to go there. But there's plenty of people in the world today, especially in this country, that don't understand how IUL works. I would love to sell you a policy. That ain't me.
Yep.
I won't do it.
Mutual versus stock company.
The strategy we use has to be mutual. I want to own the company. I don't want a stockholder to own the company and then serving two gods. And even those mutual companies that are owned by stock companies, well, you'd think the stockholder wants to let all the profits go to the one mutual company that's going to pay their policyholder. You can't serve two people. So this is my preference. It's my bias, if you will, but it's got to be a mutual company. It's been around a long time. We use companies that are 150 years old. They've been through a depression or 6.
Yeah. What's your thoughts on infinite banking?
We're similar to infinite banking, but we're infinite banking on steroids. I will never use life insurance to pay for a cell phone bill.
Yeah.
That just makes no sense. But I sure as heck will use life insurance cash values as collateral to go buy real estate. I think that's a wonderful combination. And there's 2 parts of the tax code, not related to one another at all, but there's tax-free dividends that can be used for tax-deductible interest payments, and the government will still pay you to buy real estate if you use participating whole life insurance. So if we could show people how to do that, I want to replace your bank. So infinite banking is, become your own bank. I don't want to be a bank. Insurance companies, we got to be careful of the vernacular we use, Caleb.
We can get ourselves in trouble.
Yeah, it's sort of like it's income. No, and we're not a bank.
Yeah.
We are a stupid, fat mutual insurance company that is like, the cockroaches and insurance companies are going to be around after a nuclear holocaust. Trust me. They just, back in the 90s, Warren Buffett bought a tranche of life insurance policies from a broker in New York City who had accumulated $250 million of cash value from people who were selling their life insurance. Who knew you could sell your life insurance? Seen those ads? So he bought them. And he had a $260 million tranche for sale. Warren Buffett bought all the policies. And he was asked, why are you, the world's smartest investor in the world, buying the worst performing asset as defined by Susie Orman and Dave Ramsey? His response was brilliant. Have you ever been an actuary that lost a nickel?
That's good.
I'm going to get 4 to 6% return every single year by investing no time or my money. And he has to pay income tax on a death benefit. So that tranche that he bought, when a death benefit comes in, that's taxable to him. You want to find out what your life insurance is worth? Put it on eBay. Don't surrender it. Put it on eBay. And you'll find people, probably the Warren Buffetts of the world, Gates of the world, buying it under this shadow company because they know how it works.
Yep.
You don't.
Yep. It's learning about life settlement market and how people can sell their life insurance and get a multiple of what their cash value is really cool, because if you understand that, you go, well, like that asset is actually worth that. It doesn't show up on a balance sheet, but it probably should, because a lot of times you look at your cash surrender value and that's what shows up, but it's actually there's value in addition to that. And the life settlement market, you mentioned like eBay, the fact that someone would be willing to pay you more for your life insurance tells you everything you need to know.
Absolutely. Maybe it might be good. Why does the government limit how much you can put in? Why did MEC rules even come into play? If it was so crappy.
Yeah, exactly.
Why does the government
whenever
say
the government limits something,
this?
what does that usually mean?
Yeah, we can't let it be too good. God, that's why I say if people only understood what they could do with it, they'd stand in line to buy it.
Yeah, that's why the whole Roth thing, it's why you call it a Roth on steroids is not only does it have a death benefit and other living benefits, but what's your limit that you can put into a Roth? And oh, by the way, if you make too much money, now you have to do some crazy backdoor thing to just put a couple grand in.
And I would argue that this billionaire that's doing $1 million a month is buying the super Roth. $1,200,000 a month. Now it's paid up now, but so he's got $144 million. God. Send me $100 million, will you?
Tom, what have we not covered that we should cover before we end this conversation? If
you're dealing with a financial advisor, one who is talking about market accumulation, and all you hear from your advisor is bigger, higher, greater, more, better, run. Because you need a financial advisor that understands what he's actually building. And if he's building an account and will never let you talk about taxes, that's a problem.